This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back. This is Not Your Advisor with NYU Grad on Wednesday, May 21st. And just as a PSA, the address to send all of your debt bills is 33 Liberty Street, New York, New York, 145. That is the Federal Reserve Bank of New York's address. We're all going to default together. The government, America, the citizens. We're just going to keep spending, keep borrowing, keep printing. That is the end goal, right? Well, the bond market is potentially signaling maybe not. Apparently, there was a treasury auction this afternoon, and as soon as that started, the market sold off. I actually did not know why, nor do I not really care much till after the fact, because I'm watching prices in real time. The whys are more just fodder and entertainment for me, but I've been noting to paying subscribers on the private chat to watch certain areas as well as watch yields, whether it be the 10-year or the 30-year. But as soon as that auction started, we sold off really hard. We closed near the lows or at the lows. And I'll walk through mostly macro today because, again, the trees are not going to matter much on days like today when it's really the macro that's moving prices. So taking a quick look at the closing numbers and breadth, we had 419 new highs on the NYSE. All of that was pre-1 p.m. New York time. We had 201 new lows on the NYSE, 14% advancing versus 84% declining today, 36% below the 50-day, and 57% below the 200-day. The Dow closed down 816 points, or almost 2%. The Nasdaq down 270, almost 1.4%. The S&P was down about 100 points, or 1.6%. Pretty much all of the mega caps were red, except for Google or Alphabet, which was up 2.8%. But Alphabet was up even more than that. It closed off its lows. It was up on the I/O conference release or news release that they're going to be changing some of the search page on their Google search to be more AI centric. And that boosted shares in the early part of the session. But Microsoft was down 1.2%, Apple down 2.3%, Tesla 2.6%, Amazon down 1.4%, Nvidia down 1.9%. Pretty much everything was red if you look at all the sectors. Communication services, if you didn't know, includes things like Meta and Alphabet. So communication services was up because simply of Google. They were up 0.38% as a sector, only because of Google. Every other sector was red with higher yields, lower bond prices. That's going to impact mortgages and real estate. Unsurprisingly, was the biggest loser today as a sector, down 2.7%. Healthcare was down 2%. Consumer cyclical down 1.8%. Financials down 1.8%. Industrials down 1.7%, along with technology down 1.7%. Utilities was down the same 1.7%. Energy down 1.4%. Consumer defensive down 0.9%. And basic materials down 0.7%. So pretty much a bloodbath across the board here. Will this be the final reckoning, like the Mission Impossible movie? Or are we just simply going to bounce tomorrow and another buy the dip scenario? We'll know fairly shortly. When I take a look at TLT, there's a horizontal here at 77.61. If that breaks down, which is below the trend line that goes back to 2002, it's going to trigger more selling for bond prices. And if bond prices go down, yields go up. And if yields go up, risk assets are going to be pressured as well. The next chart here on the show notes is the federal debt that's outstanding, that's held by the public as a percentage of GDP. It's only been higher during the COVID lockdown, but we're approaching that level now. If you take a look at the Wilshire 5000 to GDP ratio, which is often called the Warren Buffett indicator, we are approaching similar lifetime peaks here, about 200% to GDP. And here are charts of the 10-year and the 30-year Treasury yields, 5-minute charts intraday. You can see it bouncing right around 1-ish in the afternoon in New York time. And one of the only reasons I even go to X/Twitter is to follow the whys of the market, like WHY, why things moved after the fact. Kobesi letter is one of the handles that I follow, and I went there as soon as the sell-off was happening. I already saw that Treasury yields were spiking, so I assumed it was the bond auction, and I was right. It literally has a chart of the S&P and when the 20-year bond auction began, and how the S&P lost 80 points in like 30 minutes.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.